Welcome to our Mundo conference on how to create your own family office. Mundo is pleased to have a world-class panel of presenters, and the advice you will get here would have cost you thousands of dollars in legal advice, not to mention the invaluable investment products we have gathered. So without further ado, I would like to present our first speaker, who is an international lawyer specializing in family office establishment, and who has appeared as a speaker and writer in top publications like Escape Artists, International Wealth. He has taken part in life and investment conferences and has been a consultant to numerous high net worth clients and family offices. And he is also the author of a recently written book, Avoiding Death and Taxes, under his nom de plume, Eugene Freeman. Eugene, welcome to Mundo. As our time is limited, I would like you to open this conference by speaking about the upcoming global depression, which I believe is one of the topics in your new book, Avoiding Death and Taxes.
Natalia, thank you very much for having me here. And I wrote the book Avoiding Death and Taxes actually under a nom de plume around 10 years ago. And basically many of the predictions that are happening today were in the book. So the book is about the way governments and societies and empires manipulate the financial and the legal system, and how that monetary manipulation and social manipulation will turn out within the next decade or so. Now, what is it that we can see already? And maybe I can start the presentation if you don't mind. What we can see already in terms of the dangers that are faced by wealthy families is what, and I'll come to him later, a famous economist called Nikolai Kondratyev predicted would be an upcoming global depression. Now, this depression will obviously lead to massive political unrest, like many of the financial depressions in history have led to. Obviously, as we can see now, and you can see this in topics like the Panama Papers, the Paradise Papers, and all of this, there is almost a vilification or a hunting of wealthy families and of wealth itself. Wealthy families are basically being targeted as, you know, the cause of all of this. Wealthy people are vilified. People are saying, well, the offshore is a bad place. But really all of this is being caused by governments themselves and by the empires, the modern empires today. If you can see that also basic freedoms will also begin to erode. And these freedoms have, you know, we can see that, for example, in Australia with the closing of the borders and the basic COVID crisis and basic breaches of human rights. So now if we go to the front of this in terms of Nikolai Kondratyev, if you go back to the, okay, back to this, yeah. So there was a famous economist called Nikolai Kondratyev, and basically there's a saying by Voltaire that history doesn't repeat itself, man does. Well, Nikolai Kondratyev was a famous Soviet economist, and he basically studied historical cycles of wealth and historical cycles of financial upheaval and depression and rise of empires. Now, he looked at and discovered a pattern, a cyclical pattern of a 60-year pattern of birth, growth, decay, and death. And these patterns repeat themselves over history. He, for example, according to his theory, would have predicted that the American empire would not have died at the time like Karl Marx predicted. And also he predicted that the Soviet empire had the capacity to collapse. Now, for these predictions, basically Stalin had him assassinated. Now, what is the interesting part of his theory? He says that during mega death cycles, which we see like black swans, but where the writing on the wall, we see massive social collapse. We see, like a tsunami, massive disruptions in the financial system. Let's look at some of these. And by no means, this is very, very brief, and historians may argue with me as to the exact date when this happened, but there's no doubt that these things did happen. For example, let's look at the collapse of Rome. Now, Rome collapsed because of a combination of economic conditions similar to today. During its final days, we witnessed hyperinflation, super high taxes, civil wars, political destruction of basic freedoms, and basically the creation of a military and police state. We could also see how in Rome, towards the end of the Roman Empire, there was a huge rise in bureaucracy. The coins in Rome were turned from gold into basically mixed with lead, so there was hyperinflation. There was overspending on the army, and many of the wealthy families were basically killed publicly in order to steal their money because they were vilified as the enemies of Rome. You can see all of this hysteria in the press today, for example, with wealthy families being blamed for the financial system and the collapse. Now, we see also, let's go back to the 1600s, if you move back up, we have similar forces with the Spanish Inquisition basically being given the power to take away wealth for reasons of heresy. There was no right of defense, and in the end, these conditions were caused by a weakening in the Spanish economy and the collapse of its financial system. And this led to basically a death of Spain and European civilization. In the end, the Moors took over Spain, and generally Spain collapsed as a financial empire that it had been in all this time. Now, though again, those forces were the forces of a hyper mega death cycle of the economy. And we saw all the same things that we are seeing today. Now, something in more modern history, we look at 1930s with the rise of Hitler. Again, we see hyperinflation. We see the collapse of the German economy. We see the fact that Germany lost the First World War. We see depression, and all of these financial forces began the rise of powers like Hitler that basically created further human rights breaches, wars, confiscation of wealth. Of course, the greatest confiscation of wealth in modern history, which was the confiscation of wealth from the Jews, the concentration camps, etc. Now, these are what I'm saying in my book, and basically it's now plain to see is the same forces that Nikolai Kondratiev predicted are happening today, and in fact very close to his predictions, because he basically is saying that the same things are now going to happen in a mega death cycle. What is worse is that this death cycle is becoming even larger because of the money printing that's happening. So with the money printing and the inflationary politics of America, there is the possibility that basically the American dollar could collapse. Also, it's not so far from the cards that even America itself as an empire could collapse, and many economists and thinkers and even shamans are predicting this. And when it happens is a different story, but all the forces are there. American debt is so high that it can't be repaid even in a whole generation. So what is the risks? Well, we see that today the risks to the wealthy families are that they're being targeted. Their accounts are being frozen. Banks, for example, are using any excuse to freeze funds, and they can use these funds to generate more money while people have to prove the source of the funds. There's actually no or very few legal mechanisms left if your funds are frozen. And there is general attack on wealth through all sorts of rise in taxation. So what is the solution to this? And again, the solution to this is set out in my book, Avoiding Death and Taxes. It was a solution used by many of the world's wealthiest families and still so used. For example, Baron Rothschild, and arguably one of the wealthiest families, at least historically in the world, used the strategy which he called the 5 fingers or the hand. This is a biblical reference, but it's been now referred to as the 5 flag theory. We call it in Mundo the forever free or the perpetual family office. This family office legally has protected families for over 600 years, and it's designed as a perpetual mechanism to protect them forever. It removes all legal, political, financial risks, tax risks, inheritance risks, and it makes it virtually impossible for creditors, courts, or claimants to seize the assets because everything is set out in specially constructed trusts. Now, traditionally, the 5 steps were part of Baron Rothschild's diversification plan. He put his family members in 5 different separate jurisdictions and used 5 separate complex structures. And I won't go through what he did. I'll just simplify it and say how in modern days it's used. And we call this the 5 steps to freedom, but we've added a 6th. So let me move on to the first step. Okay, so the first step is that your family office in Nevis begins with a passport. We've concentrated on Nevis, but of course, you can basically obtain a passport through any of our jurisdictions. That's Vanuatu, that's any of the Caribbean, there's Malta, and there are others. Why do you need a second passport? Well, basically, a second passport allows the family to move to a jurisdiction with tax residency and citizenship, which has no wealth tax, no inheritance tax, no tax on foreign income, and where they will be protected in the case of Nevis by British law. So it also allows you to travel to over 132 countries. But what's more important is that having a second passport is an insurance policy. An insurance policy, for example, many countries now are seizing their citizens' passports, sometimes denying them nationality. And you can see that happening more and more in various conflicts. So with a second passport, it gives you, in a sense, an insurance policy for the safety of your family. And you'll begin to be treated as a citizen of that country. Now, what's the second step? The second step, once you have your passport, or at the same time, is your multiform foundation or your trust, one or the other. Now, again, for the purposes of this conference, we've chosen Nevis. The foundation basically gives you massive, massive benefits. First of all, it functions exactly like a family trust. It allows perpetual passing on of wealth. And some of the advantages include, first of all, no court will ever be allowed to set aside a foundation after 2 years. So once it's been established for 2 years, it can't be attacked, no matter what the beneficiaries do. That means that it protects you from creditors, It protects you from divorce proceedings, from inheritance taxes, from all types of attacks, even attacks by governments. Now, the other advantage is that the Nevis Foundation can elect to be a tax resident of Nevis, which means it has a 1% taxation on its profits, but as a tax resident, it fulfills the requirements, at least at this stage of the OECD. So basically, you can say that, well, we are paying taxes, we're not just in an offshore zone. And most importantly also is that in Nevis, the foundation is fully confidential. There's no register of beneficiaries, which is very important for many families who want to protect their wealth. So that would be the second step. So once you've established your passport and your foundation, you move on to step 3, which is your holding company. Now, the family office will have a holding company. You can again elect to have a number of holding companies, including Nevis, Singapore, wherever you really wish. But we've chosen here again the Nevis LLC. It's held by the foundation and it functions as an operating company for your family office. It's also a look-through structure. It pays 0 tax, which means tax is paid basically by its owner, which is the foundation. And again, if you have citizenship, you have the foundation, you have the Nevis LLC, you're basically reporting back to Nevis, especially if you have the following step, tax residency, which means there's no exchange of information. So it's one of the most confidential structures you can have as a perpetual family office. Now we move on to step 4. Step 4 is basically tax residency. Now, we can have tax residency in any one of the low tax jurisdictions, which is physical tax residency for the beneficiaries. That is, when they receive income from the trust, they will have no tax if they live in a place which has no worldwide taxation. So, for example, they can have tax residency in Nevis. They can also have tax residency in Panama, which means all their information will be reported to Panama and there won't be any tax, or in a number of other jurisdictions. There's many. There's many low tax jurisdictions, Singapore, Malta, Montenegro. We can do them all for clients and family offices. And now we move on to step 5, which is the bank account. In the bank account, you need a confidential, highly secure bank. We work with a number of banks, including Nevis banks. Again, if that structure is set up and with an excellent bank account, there is no exchange of information. And in Nevis, particularly, is one of the strongest jurisdictions for confidentiality if you're a resident or a citizen of Nevis. So those are basically the 5 steps. So now, basically, after that, we set up a package for you, and I'll summarize the package. The package is your St. Kitts and Nevis passport, your family multi-purpose foundation, your Nevis LLC, your tax residency in Nevis or in Panama, and a bank account for your LLC, and a personal bank account in one of our partner banks, of which we have around 49 banks. The package can be modified basically for any individual in terms of his preference.
Eugene, thank you very much for your presentation. As today we have a number of speakers and you will be part of our panel at the end of the conference, I have to limit myself to only one question. I wanted to ask you, could you please, in your own words, describe what a family office is and how it works?
Okay, Natalia, thank you. A family office is basically a structure, basically set up to protect and manage the family's wealth and their business. So I've described it in the 5 steps, but its elegance and its beauty is that it cannot be attacked by creditors. And because of that, it holds the family wealth forever. So, for example, many families have a real problem. The first generations created a lot of wealth, but their children, they've been spoiled. They like to spend, they get into bad relationships, they get into problems. Everybody wants to sue them. With this type of family office, it's impossible to attack the family's wealth because the children don't own the wealth, the trust does. So that's one use of it, but there are multiple uses of this. It also segregates the risk because the foundation or the trust owns different businesses and companies. So if one business collapses, it doesn't affect the rest, and there's no possibility to attack the trust. So the family office basically protects the wealth in perpetuity. And it's really one of the only ways of doing so.
Our next speaker is Natalia Platonova, who is a senior consultant to the NTL Group, and she will present the next part of our topic, which is how to structure your family office.
Natalia, thank you very much for your introduction. Good afternoon, ladies and gentlemen, and I'm happy to welcome you all at our today's conference. So today I'm going to tell you about the oldest citizenship by investment program in the Caribbean region, which is the program of St. Kitts and Nevis. And together we will discuss this program in details and then compare it with all the other existing CBI programs in the Caribbean. And first of all, I'd like to say that citizenship by investment is becoming more and more popular these days because of all the events happening all over the globe. The coronavirus pandemic, economic crisis, as well as closed borders and lockdowns, all that combined served as a motivation for all the clients who were thinking about getting a second citizenship to finally make their decision and proceed to action. And this is the reason of highest demand for second citizenship by investment programs today. And to begin with, let me briefly introduce our company for those who haven't heard about it yet. So NTL Wealth is a part of NTL Group, which was established in 1994. We were the first licensed trust company on the island of Nevis in the Caribbean, and one of the first companies which was licensed to assist customers in getting second citizenship by investment. Well, currently we have more than 25 years of experience in asset protection, immigration services, corporate services, and legal consulting for high net worth individuals. And this slide shows our geographical presence. So, speaking about citizenship by investment, we represent all the programs currently existing in the world, including well-known Caribbean programs, Malta, Turkey, Montenegro, and Vanuatu. And today, we will take a closer look at the Caribbean programs, and also I'll say some words about the Vanuatu program. And to begin with, let me briefly tell you about the country which provides this wonderful opportunity to get the second citizenship by investment. St. Kitts and Nevis, officially known as Federation of St. Kitts and Nevis and also called St. Christopher and Nevis, is a state composed of 2 islands in the Caribbean Sea. Their combined area is 269 square kilometers. The capital is Buster on the island of St. Kitts, and the population is currently a bit more than 52,000 people. Everyone speaks English, and English is an official language in the country. And this is a former colony of the UK, which became independent in 1983, and the legislation is based on the English common law. The climate is tropical with average temperature 25-30 degrees Celsius. And the islands are easily accessible from the United States, Canada, and Great Britain. St. Kitts International Airport provides direct commercial flights from Toronto, Miami, New York, Charlotte, Atlanta, San Juan, and London Gatwick, as well as regional commuter flights from within the Caribbean Sea. And Nevis Airport accommodates direct flights from San Juan, the islands of Saint Martin, Antigua, Saint Croix, and Saint Thomas. Travel between St. Kitts and Nevis is provided by several ferry companies, and boats leave from Buster on St. Kitts and from Charlestown in Nevis. And now let's talk about the Citizenship by Investment program of St. Kitts and Nevis, which is the oldest one among the Caribbean jurisdictions. Nevis was a pioneer in this industry when it launched its CBI program in 1984. And up to the present, Citizenship by Investment program of Nevis remains one of the most reputable and stable programs in the world. So, what are the advantages of Nevis citizenship? Usually, the investors who consider obtaining of second citizenship are trying to achieve several goals. First of all, this is freedom of traveling without necessity to get visas all the time. And secondly, they want to arrange a so-called Plan B in case of some unstable situations in their countries. So speaking about Nevis, I must say that it perfectly helps to achieve the mentioned goals, and it offers visa-free travel to 157 countries all over the world. And the most interesting destinations are Schengen countries, United Kingdom, Singapore, Hong Kong, and Russia. And besides, citizens of St. Kitts and Nevis can obtain a long-term touristic visa to the US for 10 years. Speaking about application process for St. Kitts and Nevis citizenship, I must say that it's rather quick and straightforward. Current average application processing time is from 4 to 6 months. And by straightforward, I mean that in order to get citizenship, you won't need to get a temporary residence permit, then it will be replaced by a permanent one, etc., etc. No, citizenship is issued one time for the period of your entire life, and then it will be inherited by the next generation. So citizenship of Nevis is a really big investment in the future of your family. And for those who are in a rush, the government offers expedited procedure for additional fee, so that approval process takes no longer than 60 days. You can include in the citizenship application your spouse, children, and financially dependent parents. And the next significant advantage of Nevis citizenship is tax optimization opportunity. Citizenship helps to reduce the tax burden because St. Kitts and Nevis imposes no income, wealth, or inheritance taxes. And also for some people, it is a big plus that there is no need to visit the country. Everything is done remotely, and there is no need to visit the islands before or after the citizenship is granted. So now let's discuss who can apply for the citizenship of St. Kitts and Nevis. In order to be approved by the CBI unit, an applicant must comply with the following requirements. First of all, its absence of criminal records, its ability to prove the legality of source of funds, perfect reputation, and absence of refusals in visas obtaining to the countries which are visa-free for the Federation of St. Kitts and Nevis. And I must really say that the most important thing for the clients here is don't try to deceive the authorities, don't try to hide any information, because it will be found anyway. And if the client intentionally provides some false information, he will be rejected by the authorities 100%. And now let's talk about the investment options. Basically, Nevis offers two options. The first one is donation. This is one-time non-refundable contribution to the Sustainable Growth Fund of the St. Kitts and Nevis. And for a single applicant, the amount of contribution is 150,000 US dollars. And for a family up to 4 members, the contribution amount is 195,000 US dollars. And the second option is real estate investment. And there are two types of real estate which may be purchased. The first type is real estate projects approved by the government. These are hotels where investors can purchase a share or a whole unit. And minimum investment in such case is 200,000 US dollars plus additional processing, due diligence, and registration fees. And the second type is real estate investment on the local market. I mean, this may be any villa or apartment which the client has chosen. And minimum investment in such case is 400,000 US dollars plus additional fees for processing, due diligence, and so on. So I must say that this variant is really ideal for investors who would like to live on the island and are looking for an object to their own taste. So now let's take a closer look at the investment projects approved by the government. There is a lot of projects, but we have selected for you exclusively the ones we consider the most attractive. And the first project is Christophe Harbour. Christophe Harbour is the largest development on St. Kitts and Nevis. The project includes super yacht, marina and village, a golf course, a spa, clubhouses, and a lot of restaurants. There are 13 miles of coastline within the development, as well as 6 sandy beaches. The real estate is available for full or fractional ownership, and besides, it's possible to purchase a land for construction of your own villa here. And the next project is actually located on the territory of Christophe Harbour. It's Park Hyatt. Park Hyatt is a luxury hotel operated by the world famous brand Hyatt. And the hotel was opened in 2017. It includes 134 suites, and the clients can invest in Park Hyatt by purchasing shares in the resort. Minimum investment is 220,000 US dollars with mandatory holding period of 7 years before share ownership can be sold to new investors who can also qualify for citizenship obtaining. And the next project is Four Seasons Resort Estates Nevis, and it's a fully operational 5-star resort. It offers a golf course, a luxury spa, beautiful beach, tennis courts, a fitness center, and various restaurants. Investors can purchase 1/10 ownership shares in 3 or 4 bedroom freestanding villas here. And the next project, which I'd like to mention, is Zenith Nevis. This is a new luxury beachfront villa enclave, which offers to purchase a high-quality residence in a stunning beachfront site on the islands. As an investment, clients can purchase an existing villa, land, or share in a villa. And besides, this project offers a very interesting option, guaranteed and prepaid rental returns, and it is rather flexible, so investment options may be discussed individually. So, to discover more about the projects, please contact us. We will be happy to select the most suitable objects for you and your family. And now let's take a look at the other programs in the Caribbean regions. I must say that the conditions of all the programs are quite similar. However, each program has its own features which should be taken into consideration while selecting the ideal option for the specific client. And the first program is Antigua and Barbuda, which also offers two options for investment. The first one is the nation option. Required investment here is 100,000 for a single applicant and 125,000 for a family of 5 and more. And for the real estate investment option, minimum investment is 200,000 for shared ownership and 400,000 for single ownership. So speaking about advantages and disadvantages of this program, I must say that for some people, the main disadvantage of this program is a requirement to visit the country for 5 days during the first 5 years. However, the others are happy to visit this beautiful place, to have vacations here during this obligatory visit. And besides, it's worth mentioning that in Antigua, your next generation will have to pay additional investment for citizenship obtaining. For example, if your child is born after you obtain the citizenship of Antigua, it will be required to invest additional amount of money to get citizenship for your newborn child. And however, Antigua program may be very attractive for big families because the donation amount for a family is relatively low here. And the next program is Grenada. The donation option is more expensive here. The amount of donation is 150,000 for a single applicant and 200,000 for a family of 4 members, up to 4 members. And as for real estate investment option, for 220,000 you will get shared ownership, and for 250,000 single ownership. And there are a lot of significant advantages in the program of Grenada. For example, visa-free travel to China, which is attractive if you work with China, for example. And besides, Grenada provides opportunity to get E2 visa to the United States of America. And one more thing, Grenada is the program which allows to add maximum number of family members into your application. I mean, siblings of the main applicant and spouse can be also included into the same application. So it's a rather unique program among the Caribbean programs in this context. So speaking about the disadvantages, I can only mention that approval process may take a bit longer here than in the other jurisdictions. And the next program is St. Lucia. This is a newest program among the Caribbean, and the nation option here is 100,000 for a single applicant and 140,000 for an applicant plus spouse, or 150,000 for a family of 4. And for real estate investment, minimum investment here is $300,000. And also, St. Lucia offers a good alternative investment option, which is government bonds investment, and the minimum amount of investment is $250,000. And the next program, the last of Caribbean programs, is Dominica. The nation option here is 100,000 for a single applicant, 150,000 for an applicant plus spouse, and 175,000 for a family of 4. And a real estate investment option is $200,000. Well, speaking about advantages, the main advantage of the program is that it offers the minimum entrance fee among the Caribbean countries, and some disadvantages, which I believe are not very significant for investors who are not planning to live there. Um, these are relatively fragile economics and infrastructure in the country, and also bad area connection. And the last program which I'd like to mention is Vanuatu. This is not the Caribbean, however, this program is quite similar, and often investors consider Vanuatu as an alternative to the Caribbean programs. This is a relatively new program which was launched in 2017. And the biggest advantage of Vanuatu is that this is the fastest program in the world. The entire process takes approximately a month, and everything is done remotely. Vanuatu offers donation option only, and you can see the amounts of donation on the screen.
Natalia, how many CBI programs are there and which ones does NTL represent?
So, we've discussed all the programs, and I'd like to remind you that our company represents all the existing citizenship by investment programs in the world. Please feel free to contact us if you would like to select the most appropriate program for you, the most appropriate real estate object. We will be happy to advise and to prepare individual offer and individual calculation for your family. So, if you have any questions, please feel free to ask.
So does this mean that essentially you can have the family office package with any passport of your choice?
Yes, sure, you're absolutely right. We can add any of these citizenship programs to the family office package.
Now we are much honored to have here at our conference the CEO of one of Panama's top multifamily office consultancies. We will talk about some of the best wealth management options. I welcome Romain Dromard, who has a vast experience and background in private banking and wealth management for high net worth individuals. Roman, could you please tell us what a multifamily office advisor does?
Hello, everybody, and thank you to our partners at Mundo for inviting us today. So Multifamily Office is an independent organization that supports multiple families to manage their entire wealth. Multifamily offices typically provide a variety of service, including tax and estate planning, objective financial counsel, trusteeship, real estate management, coordination of professionals, and investment advice. When a family or an individual starts to accumulate a significant amount of wealth, they typically work with many independent providers, such as wealth managers, private bankers, lawyers, accountants, real estate or insurance brokers. But all of these service providers act independently and most oftenly with its own interest in mind and without any coordination between them whatsoever. A multifamily office provides a far superior solutions as it allows all experts to sit down at the same table in order to work in a coordinated manner and always in the best interest of its client.
Now we are looking forward to hearing your presentation on how family office can grow and protect its wealth. So I give the floor to Roman.
Thank you. In the next 10 to 15 minutes, I will give you an overview and a sense of the philosophy that K&B Family Office assists its clients in its wealth management services. First of all, a few characteristics that separates us from a typical wealth manager. First of all, that's probably the main one, is that we invest in the products and the projects that we offer. So K&B Family Office was founded by two founding families, the family Kisvel and the family Berthet, which are still, as of today, one of our most significant clients within the family office. And we do invest their capital alongside our clients, meaning that we do exactly the same thing with the same conditions with our own capital in mind than with our exterior clients. Secondly, we are regulated as investment advisors in Panama. Third, we are managing over $180 million of asset under management. And why does it matter? Is because it gives us a critical size to get access to club deal, co-investment deals. In the world of wealth management, the more impact in terms of size that you have, the better access you can get. You get to specific deals with more value in it than whatever the regular retail investors could access. Fourth, we focus on alternative investments. When every single wealth manager will offer you a balanced portfolio of bonds and stocks, which is probably not the highest value portfolio right now, we will have access and focus and have a specific expertise in what we call alternative investments. And that includes basically everything which is not the typical bonds and stock portfolio. That includes private debts, private equity, real estates, and many other things that we have access to as a family office that a typical wealth manager probably wouldn't do. And finally, we have a network of international private banks within which we work with more than 10 different banks in various jurisdictions internationally. Nonetheless, we have a very open architectures platform. We have the capacity to work with any bank account, existing bank account. Clients do not have to close their bank account and open a new one with us to be able to receive our advisory services. In terms of jurisdiction, 80% of the world's offshore banking is basically made in between the US and Switzerland. Because of the high professionalism, the high safety mainly, we do work with some of the Caribbean jurisdiction, but in a lesser extent. How we work with those banks? This is a fundamental point. We do not receive retrocession from banking institutions. The typical wealth manager will refer clients to a bank, and the bank will pay him back 50% of whatever the bank is making on its client, which is a huge conflict of interest, because if I'm getting 50% of whatever the bank is making, I'm not working in the best interest of my clients, but I'm working in the best interest of the bank, which is a huge conflict of interest and something that we want to avoid at all costs. So whenever we refer clients to a bank, we ask for no retrocession, and that those 50%, or at least 50%, will be transferred to the client as a discount on the regular fees, meaning that any clients going through K&B to open his account will take advantage of an at least 50% discounts on the regular scheduled fee of the bank. We do open the accounts for our clients. Today, opening a private banking account could be a bit of a hassle, but we do have a dedicated team which is highly experienced and can make this process a little bit less disturbing than it should be. Let's talk about banking institution now, and start with the US jurisdiction. In the US, we mainly work with Santander and Safra National Bank of New York. Most private banks will have a fee structure composed of a custody fee, which is basically a small percentage of the invested asset that they will charge to safekeep the assets, plus what they call transaction fee, which is a small percentage of whatever transaction is made of purchase and sale, which could range from 0.40% to 1%. On the Swiss side, we work with 3 different banks. Swissquote, a very good and highly efficient online private bank, GF, Safra, Sarrazin, and PKB. Same thing, the fee structure is pretty similar. The only specificity about Swiss is Switzerland is the Swiss federal stamp tax duty, which adds a 0.15% on top on any transactions, and that goes to the Swiss government. Let's talk timeline. The first step with any clients would be to choose a jurisdiction and a banking entity. Switzerland, United States, Caribbean. Then we go for a specific bank according to your profile, according to the investment minimum, to whatever you want to do on the accounts. For each specific client, there is one specific bank that we would recommend. Then we go over and complete the account opening forms, work on the KYC with you guys in the help with our highly efficient operational team. The third step would be for the bank to give us an okay saying, yes, we accept the client based on the information that we received. And finally, we get the account open. This process could take in between 2 to 6 weeks, depending on the jurisdiction and the banking entity. Once we have the bank account open, we go into the portfolio construction. Depending on the client's investment profile and risk profile, we will construct a customized portfolio for him. Once we have that, we will proceed with the funding of the accounts to finally place the orders and proceed with investments. So, like I said, every single client's investment portfolio is custom-made and very unique. But since I had to present something, I created a very generic portfolio with a very conservative profile. This portfolio is composed of 7 investment vehicles that gives exposure to 500 bonds, 700 stocks, and 5 different fund managers. It is composed of best-in-class money managers specialized in their asset classes. We have 1 in private debt, 1 in the equity space. PIMCO is of your fixed income, same for H2O. We have some gold and some cash. And via these 8 instruments, we have, as a result, a complete and diversified portfolio composed of any asset classes that are accessible to the private investors, from the regular bonds and stocks to alternatives, which are hedge funds, private debts, real estates, private equity, precious metal, and of course, cash and cash equivalents. How did this portfolio behave over the last 3-4 years? Well, this is basically the annual return of this kind of portfolio is around 7% per year. And as you can see, you have to assume a certain level of volatility. We actually made a return of 0% in 2018, got that back with 14% the year after that, 8.7% in 2020, and so far we are about at 4.6% as of end of August. Another important thing to observe about this portfolio is the maximum drawdown of the portfolio. In a very extreme situation like we had in the beginning of 2020 with the global pandemic, this portfolio only went down by 3.6%. When I recall people that both the equity and the fixed income market went down by at least 30% at the worst of the crisis, which is why those kind of investment portfolios, which was highly diversified with a lot of non-traditional assets, are much more resilient to market volatility without sacrificing returns. Let's take a minute and talk about alternative investments. So the portfolio that I presented is basically a good base for any investors. On top of that, we will add certain investment opportunities depending on the client profiles. And there we have access to basically an unlimited world of non-traditional investments. And that could range from private equity, real estate, paper real estates, or other type of private debts. As an example, we invest and co-invest in late-stage venture capital funds that gives us above 35% returns per year. returns per year. Those typical investments are accessible with a much higher investment minimum. This one is, for example, accessible from $500K. And they're not always available. So funds like this raise capital for a certain amount of times before they say this is enough. We close the fund and we start to invest it. But we usually have a good pipeline of these kind of opportunities. We also participate in what we call pre-IPO stocks. So we have access to private equities, stocks of private companies before a few years before they get public, which is where most of the money wealth creation is made as of today. Not so much in the public stage of it, but in the private. And that's where we could actually reach 25% plus expected returns, annual expected returns. And those are accessible from very low amount, usually 75 or 50K. We also have access to specialty real estate co-investment fund from other family offices who, for example, invested in a group of mariners and offered us the opportunity to invest alongside with them to align their interest with ours, being confident that they will keep us a good eye on our money since they have most of their money invested in the project. That's only a few of the opportunities and alternative investment opportunities that we offer. Obviously, we could talk only about this, but I only have a few minutes to give you an overview of the services. Finally, let's go on to the reporting stage of it. Once we have the portfolio completely structured and done, let's come to the, it comes down to the monitoring of the portfolio that we do via a proprietary platform that allow us to consolidate and reformat all of the accounts statement from the banking institutions. We have the capacity to consolidate the banking assets from different banks for one single client. We have the capacity to basically structure and give an overview of any client's wealth at a given time with a proprietary tool. And finally, let's talk about how we charge for services. Since we don't receive commission from banking entities, we charge our services to our clients in the form of an annual advisory fee, which is a percentage of the assets on the accounts. And this percentage varies in function of the investment amount. We start at 0.55% to go down as low as 0.35%. And this is charged 100% transparently on the client's accounts at the end of every quarter.
Roman, as far as I understand, as part of our family office package, you and your team have agreed to offer a free investment consultation to Mundo's clients to assess their portfolio and investment goals. Could you tell us, please, about that?
Indeed, we agreed to this great initiative from our partners at Mundo, as it is a great way for any investors to receive a non-biased, 100% objective diagnostic of their current investment portfolio. We have a team of seasoned investment specialists with decades of experience in wealth management. So we know, for example, that certain private banks tilt their clients' portfolio towards their own products, or that others limit their clients' investment universe only to a certain instruments on which they collect heavy fees. Very often as well, we realize that core asset classes such as alternative strategies, private equity, or private debt are completely missing from a portfolio simply because it is not part of the provider's business model. Our objective during this conversation is simple, is to raise awareness and educate people who might be miscounseled and therefore are leaving money on the table every year.
Now, one of the topics that we are going to present today is hedging your family office against global risks. In this part of the family office package, we pay special attention to diversification and hedging as a strategy to protect and grow your investments. Our special guest is Jason Keogh, who runs the UK and Western European Regional Sales Office of Exante, whose main focus is on institutional clients comprising regulated and non-regulated family offices, asset managers, and wealth managers. Jason, why would a family office need a brokerage, and how does it help diversify the assets?
Hello. Why would a family office need a broker? A family office needs a broker because a broker enables this family office to access the financial markets. It offers them the ability to use us for custody, execution, settlement and clearing, and technology. At Exante, we offer family offices an all-encompassing service. When you open an Exante account, it gives you the ability to trade 50 markets, 8 asset classes, and nearly 400,000 securities. All of those are on one platform via the web, via the desktop, via a mobile app, giving you access and execution on a direct market access system, all the way into the exchanges and all the counterparties that we offer. Not only that, it allows you to custody your assets, safe custodial keeping with us. We use a large number of counterparties, banks, liquidity providers, exchanges that give us access into these markets, and we're giving you the benefit of that. Also, in regards to diversification of assets, the diversity that we offer is quite incredible and unlike most of our competitors. And that ranges from cash equities, IPOs, ETFs, all on a global basis, fixed income, so corporates, govy, munis, again, all on a global basis. It gives you the ability to trade global FX and all the normal FX markets you'd expect, in emerging markets as well. Access to metals, access to funds, futures, options, and also crypto. All on one platform, multi-currency and cross-margined. And that's important. We give you cross-margining, so it reduces your exposure and your capital risk and the amount of money that you have to put up, because we are crossing your asset classes, giving you the best possible rates.
Jason, what products does your company have, especially for family offices and high net worth individuals?
A large majority of our clients are family offices and high net worths. They come to us because they don't want to go to the banks, because the banks don't look after them. They charge them a lot of money, and the customer service that they receive, in their opinion, is not good. One of the things that Exante offers you is your own personal account manager. And in this instance, that would be me. With 28 years experience in the financial markets, I would look after you and your customers, and I'm available 24/7 at the end of the phone or an email.
Jason, could you tell us why brokerage is safer than a bank?
The products that we offer for family offices and high net worths vary. For a high net worth, for example, it would be a platform that allows you to trade the financial markets. I've mentioned earlier, that would be 8 asset classes, 50 markets, and 400,000 securities, all on one platform. All of your money safe and secure in the banks that we use, all in regulated entities, all backed with custodians that you would know, large global banks. From a family office perspective, we also offer you a platform. It has slightly different aspects to the platform. For example, it has basket trader, it has multi-asset trader, which would enable you as a family office to go in and select on behalf of your clients the sub-accounts that you could then go on and buy. For example, for 10 sub-accounts, Microsoft, you could buy that done on an NAV basis, on a performance basis, on a position basis, on a manual basis. So just to reiterate, for high net worths and family offices, the ability to trade online, direct into the market by web, browser, app, 50 markets, 8 asset classes, 400,000 securities, all protected, all in a regulated environment, and with over 40 counterparties that support us. I have worked at brokerage houses and I've worked at banks over a 28 period. The only institution that unfortunately ever went bankrupt was a bank that I worked for. Why do I believe that a brokerage house is safer than a bank? Brokerage houses don't take risk. They don't have risk on their balance sheet. We don't take positions. We don't take loans. We don't do anything like a bank that can jeopardize our structure and our safety in the market. Because we don't take positions, we can't be exposed to market risk. We're multi-regulated, we're multi-protected, and unlike a bank, when you trade and use a bank, you're only using their service. We have dispersed that risk across a multitude of counterparties, exchanges, and banks that we use, up to 48 actually. So the chance of anything going wrong is reduced dramatically because of that situation. And that's why I think a brokerage house, especially Exante, is safer than using a bank.
Jason, as we understand, you also offer a crypto fund for those who want to invest in this sector. Can you tell us a bit about that?
Cryptocurrencies. Everyone's favorite. Everyone wants to trade crypto. At Exante, we've realized that, we've acknowledged that. Up until yesterday, we had 36 cryptos on our platform. I'm happy to announce we're now up to 80 individual cryptos. We also have a crypto fund called XAI. You can find that on Bloomberg. It is a basket with a number of cryptos in it that you can also trade. To be clear, on the platform, cryptos are crypto derivatives. It's not the underlying crypto. We don't get involved in the wallet or any of that stuff. It's purely if you want to trade, for example, Bitcoin. It would be exactly the same as trading an equity or a bond or a future on our platform. You would bring up Bitcoin, you'd see where you could buy it and where you could sell, and then you'll trade at the market price, and then we charge you a commission. That goes into your position. If you make money, the position goes up. If you lose money, the position goes down. When you want to trade in or out, it's the click of a button. Very, very simple. Done on a margined CFD derivative basis. So it's a crypto that mimics the underlying cryptocurrency. And it's very popular and we have a huge demand, and that's why we've just increased up to 80 individual cryptos on our platform. Unlike other platforms, you can trade crypto on our platform alongside and with all the other asset classes as well. And they're all offset in terms of margin. Very unique.
Today, we're also speaking with Fernanda, who runs a family office gold investment product that provides unique services. Please, Fernanda, tell us a little bit about your gold investment options.
Yes. Hello, everyone. Very happy to be here to explain the opportunities of gold and silver, precious metals, actually. First of all, let me tell you, right now, I'm here in Panama Vaults, which is one of the best vaults in Panama, where you can custody your gold completely secure. And let me quickly show you a few options. For example, in gold, we have the 1 kilo bar, which actually is much heavier than you can see, but it's heavy. It's 1 kilo, but it's a very nice refined gold. Okay. Then you have the same in silver, which is bigger and thicker, but it's also very nice refined gold. Now, so in this case, silver. we have this smaller 100 grams gold, also refined. This is by Scottsdale Mint, which is one of the most important private mints in the US, of course, under the US Mint. And we are legal distributors of this gold, okay? And this, they call them chocolates, little chocolates, you know? And actually, if you go to Switzerland, I used to live in Switzerland, you could buy, in the airport, you could buy the chocolate boxes like this exactly, okay? But this is not chocolate. Then you also have kilo in this style, which is more square. And you can see there's always a number in there. And you can see also the design here. All these are security marks. It's like a code bar, okay? So this is very difficult, not to say impossible, to replicate. And the number is unique. Then you have this monster. This is almost 3.2 kilos of silver, very thick, very big, very heavy. The same thing, okay? So you can see the beautiful design of the lion for Scottsdale. And anyway, these are different options. You have also the 10 gram smaller option. You can see the code bar and all the certification for the Scottsdale Mint 10 gram gold. Now, anyway, this is a variety of options that you have when you buy silver or gold. Okay, so very nice. It's really magnetic. When you see it, you want to have it. It's unbelievable. But gold and silver are extremely interesting to have in the days that we are living today.
Very interesting. But please tell us why gold and precious metals in general are considered the best hedge ever.
Okay. In the times that we're living, where the famous QE, quantitative easing, happening in most central banks in the world, where they don't stop printing paper money, what they're doing basically is reducing the value of paper money. Although we don't feel it, it's there, okay? Because at the end of the day, up to 1972, 71, 72, money used to be backed by gold. But in 1972, that stopped, and it allowed the banks to print and print and print without the backing of gold, which made it much easier to battle inflation, for example. You print and print and print, but then you create a kind of a stagnation and hyperinflation at the end of the day. And the best way to be safe is to have precious metals, particularly gold and silver. These are gold and silver have been growing steadily since 1980 to now at an average of 6.5% per year. And gold is definitely probably the most secure asset that you can have for the last 2,000 years, okay? If you look at all the different empires and ages, and you know, you go back and back and back, always gold was there, okay? Gold and land. So has been, most wars have been delivered because of gold and land, okay? And the opportunity that you have today of have certified gold, not raw gold, but certified, legal, is extremely important. You can go to Africa in the worst of times, and gold will save your life. I'm not so sure about paper money, okay? And also, gold has always been an extremely wanted asset. It's extremely liquid. Everyone, any bank will buy it from you because banks want gold. And also, very important, Basel III, the bank agreements of Basel III, they're telling that in order to have paper gold, which is one of the things we wanted to approach also, is that you have to have 80% of that paper ETFs, for instance, gold ETFs, 80% have to be really backed by gold. So the banks are going crazy right now. The banks are going crazy because they either have to sell those ETFs immediately, or they have to get them back by gold, which means that they have to have a major expenditure of money, which is extremely complicated. Banks are trying to adapt to that, and after January, that should be something done, which means that gold will go up dramatically.
If we compare physical gold, why is it more preferable to paper gold?
Well, precisely for that. Well, first of all, physical gold is real. Paper gold is not necessarily that real, because the backing of that paper might not exactly be the gold that they're selling. It's like when you put money on a bank, for example, when you open a deposit in a bank, the bank will use that money to offer somebody else credit. Okay, and your money basically is a number in a computer. So when you go to the bank to ask for your money, the bank responds because there's a number in a computer, but there's nothing behind. So if the bank, for instance, breaks down, you lose your money. Okay, so with this is something similar. Okay, since they're not backed by real gold, 100%, it means that if something goes wrong, you basically lose your money. Now, if you have your gold, physical gold, in a vault, it doesn't matter. It's your gold. You can go get your ingot, and that's the value, you know?
So as far as I understand, you store gold in Panama. Why Panama?
Okay. Panama is one of the safe havens for gold in terms of tax compliant. In Panama, there's no tax for an increase of capital. So if you sell your gold and you make X amount of money, profit, there's no taxes. Okay, so that's very important, as well as Panama. Remember, there's no central bank in Panama. Panama is a dollarized country. Okay, so there's no, let's say, central bank corruption in any senses. If you go to other countries in Latin America, it's much more complicated. They have different currencies, and for example, when you want to invest in different currencies and not extremely solid currencies, you run with a major problem, which is, you know when you enter, but you don't know when you exit because of that currency, you know, or the money you make through the investment, you might lose it through the currency. Okay, so with gold and in Panama, that doesn't happen. You have a major currency, which is the US dollar, as the main currency for the country, and then you have no taxes whatsoever in the transfer of gold or the profit from gold or the incoming of gold. So along with Panama is one of the main havens for this, along Singapore.
Understood. And could you also tell us about your offer of lending against gold?
We believe we're aiming at 70-75%. And that's interesting because that means that if you have that physical gold and you want to buy an apartment, or you want to buy a property, or you want to buy anything, you don't have to sell your gold. You can go to the bank and they will give you quite high value, 70-75 at least. We're aiming at more, but at least you have some real value in terms of paper money that the bank will offer you, and they will custody. The gold will go from your custody to the bank's custody, but continues to be your gold, and you're not selling it. So that can be an advantage if you want to invest in something and don't want to sell the gold, you know.
Okay, today we have and our partners dealing with UK bonds offer. This is a really exciting family office high-yielding bond product that you usually won't find through an ordinary investment advisor. Tell us a little bit about your Pardes bond and its yield, Paul.
Good morning. My name is Neil Baskerville. I am the co-founder and a director of Satori Consultancy, and we are here today to talk about the Pardes fixed income bond, which is available on our platform and also as a direct investment. I've been asked today to discuss two questions. Number one is, how safe is Pardes? And number two, how does the bond work in relation to the investor visa for UK immigration?
So how safe is Pardes?
So first of all, let's talk about how safe is Pardes. So I have been around in the financial services market offshore now for about 30 years. And every product that I've come across, particularly in the alternative space, involves the funds being sent somewhere, be it an accountant or a property fund or a property lawyer or an asset-backed lender. There is always that element of risk that where the money goes to is going to be looked after by those who are receiving it. Now, what separates Pardus from the norm is that Pardus uses a contract arbitrage transaction where the money sits in their bank account. So instantly that makes it incredibly unique for a high net worth retail investor, because the money sits in their account and never leaves. And what Pardus do is that they use their balance sheet to provide standby letters of credit or collateral to participate in private placement trades. So in short, Pardus become aware of an entity or a corporate that has a high value asset that is very difficult to monetize or find a buyer, and Pardus will put a buyer together through their large network of contacts, and then effectively building a margin for themselves in between the buying and the selling price. In order to get to that level, they need to put up their balance sheet to match the value of the asset. So if, for example, it was a $50 million trade of nickel wire, Pardus would need to have $50 million of their account blocked in order to put the trade to settlement. So whilst that account is in blocked, it means Pardus can't borrow against it and certainly not withdraw it. But what it does mean is that it doesn't leave their account. And when the deal goes through, the block is then released and Pardus move on to the next trade. What makes contract arbitrage the holy grail of investing is that at no time are Pardus buying anything with the bondholders' money. All they are doing is putting up a proof of funds and facilitating the real buyer's money to the seller and then the asset to the buyer. So using that previous example, Pardus might privately feel that nickel wire is not a good investment, but it doesn't matter because they're not buying it with your money. Now, to further increase the security, Pardus have brought in an FCA regulated security trustee called Woodside Security, and Woodside have got signing authority on the Pardus bank account. So if Pardus woke up one morning and decided, you know what, let's take 20 million out of the account and go and buy a yacht with it, Woodside would need to sign off on that withdrawal. So Lloyd's, in this instance, the bank, are not permitted to sanction any withdrawal without the security trustees sign off. The whole of the bond was put together by Druce's, who are Pardus's legal counsel, Legal 500, very big preeminent corporate lawyers in London. And Druce's put in a debenture and a guarantee and indemnity agreement, as well as obviously incorporating Woodside into the deal. One final point is that if at some point towards the end of a transaction, the buyer suddenly had cold feet, for example, and pulled out, all of the trading is done on what's called non-callable terms. So that means that the seller cannot come after the provider of the proof of funds if a buyer backed out. So the only cost to Pardus would be a few dollars in legal costs and obviously some time. But other than that, there is no risk to client funds. So the simple answer to the question is the only risk to client funds with the Pardus fixed income bond is systemic bank failure. So in other words, it would be the bank going under and taking all the deposit holders with it.
Do I understand it right that if you invest $2 million and above, it's approved for residency by the British government as well?
Second question, one of the beauties of the Pardus bond in terms of why it met all of this criteria for the security was that it became eligible as a UK investor visa product. So how that works is that there's two ways for an entity or an individual and their family to move to the UK. One is the entrepreneur's visa, which is for your doctors and your dentists, and the other is the investor visa route. The investor visa route comprises of 3 levels: a £2 million entry level, £5 million, and a £10 million. So £10 million would mean that the investment is put into a permissible product for 2 years, and at the end of the 2 years, the individual and their family, assuming the dependents were under 18 at the time the visa was set up, would then be eligible for a UK passport. £5 million is 3 years, and then £2 million is 5 years. So let's take the latter, the £2 million. Pardus would issue the client with a 5-year bond yielding 12% per annum, and at the end paid quarterly, so that's 3% per quarter paid to the client, and at the end of 5 years they would then obviously be able to get their capital back if they wished, plus obviously they'll be eligible for a UK passport. The product was signed off by Garden Court Chambers, who are very large QC in the UK, who were engaged by the UK Home Office to rubber stamp various UK investor visa products. The products all have to be 100% UK. So in the case of the Pardus bond for the Tier 1 visa, the listing was brought into London onto the Aquis Exchange, and the trading activity all has to be with UK entities. Otherwise, all of the criteria is met, but most importantly, every quarter, Pardus have to provide a statement showing that the client's principal remains £2 million and above. If it ever falls below that, the client has to top it up to meet the 2 million criteria. So there's obviously a huge significant emphasis on the principal being protected at all times. So there are many other products available for Tier 1 visas. They all have to be active UK businesses. So it's not possible to buy property, and obviously anything offshore is not permissible. Up until 2018, the only permissible asset were gilts, but the government felt that they wanted this process to support active British businesses. So they stopped activity to gilts and then brought in ongoing products instead. So, for example, there's some health and country clubs, sports clubs, old people's homes and that kind of thing, where a bond has been issued on the real estate or the balance sheet of that company, which is what has happened here. Most of the products are yielding between 5 and 6% a year. Obviously, in the case of Pardus, it's significantly more than that. So it's an enormous credibility boost to the product. It has made a lot of our clients a lot more comfortable with the bond, on the basis that clearly there has been a great deal of scrutiny by Garden Court and Druce's on the Pardus bond for them to sign it off as an applicable product. I hope that's answered both questions. If you require anything further, then please don't hesitate to get in touch. Thank you very much.
Now a question to Mr. Dromard. Roman, how does a structure you offer differ from, say, going to a bank or to a financial advisor, and why is it better?
So interesting and fundamental question. A family office will differ from a private bank or a typical wealth manager in various key aspects. First of all, a multi-family office has aligned interests with its clients. Since we charge a percentage of the assets, it is in our interest to make these assets grow. Private banks, on the other hand, make money on commissions, which reduce performance, meaning that they make money whether or not their client makes money. This is the first fundamental difference. And the second one I would say is that a family office has no product limitation. So again, a typical wealth manager or private bank will have a limited selection of investment vehicle that they pre-selected and on which they make heavy fees. And they will forbid you to invest in any other investments. A multifamily office typically works in a completely open architectures and will have access to a much broader range of investments, including non-banking assets like private equity or real estate.
Now, I'd like to open a discussion with our viewers. Our experts are ready to hear your questions.